It's the last one for the week. Welcome to Business Morning on Channels Television. Good morning. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for joining us. Let's look at the global oil market. Oil prices rose today on hopes of fuel demand recovery in the United States and Europe as economic growth picks up and lockdowns ease. But worries about India's raging second wave of COVID-19 cases kept a lid on gains. Brent crude futures rose 21 cents to $65.61 a barrel after climbing 8 cents on Thursday. U.S. West Texas Intermediate crude futures jumped 29 cents to about $61.72 a barrel, also after an 8-cent gain on Thursday. U.S. refiner Valero said gasoline and diesel demand were back to 93% and 100% of levels they were at before the pandemic. Meanwhile, improving conditions in Europe also buoyed sentiment. Nevertheless, both benchmark crude contracts are headed for a weekly loss of nearly 2% on concerns about sliding fuel demand in India, the world's third largest oil importer, where daily infections and deaths from COVID-19 hit new records this week.
Meanwhile, the Nigerian National Petroleum Corporation, the NNPC, has signed an agreement for the development of gas from the oil mining lease 143 with indigenous oil exploration and production firm Sterling Exploration and Energy Production Company. According to a tweet by the state-owned oil firm, the execution of the deal is to help reduce gas flaring in the country and also provide gas for the domestic market. Both parties had signed a gas commercialization deal in September last year in line with the federal government's National Gas Expansion Program.
Nigerian Breweries PLC has declared a dividend of 94 kobo per share for the year ending December the 31st, 2020. And this was announced at the company's 75th annual general meeting in Lagos, presided over by the chairman of the board, Kolawole Jamodu. Nigeria Breweries also posted a profit of 7.526 billion naira despite the impact of the pandemic. Do take a listen.
That I welcome you to this.
It's the 75th annual general meeting of Nigerian Breweries PLC. Chairman of the board of directors, some management staff and shareholders representatives, regulators, observers are among the handful of people allowed in the hall to make room for social distancing as required by the COVID-19 protocol. Others are to join virtually.
A total proxy form of 188.
The business of the day is to report the performance of the company as at 31st December 2020. Clarifications on the reports are sorted by shareholders' representatives and answers are provided.
We continue to put efforts to explore the potential of the growth in this market.
A dividend of 94 kobo per share is said to be declared.
I hereby move that the total dividend of 7,517,087,928 naira only, that is 94 kobo only.
And the board's resolution is put to a vote. It's 100% yes. Other activities on the menu, including constitution of the audit committee, board of directors, also take place. 2020 was a particularly difficult year for businesses as social activities were paralyzed and cost of operations skyrocketed. These factors have had its impact, but Nigerian breweries appears to have braved this storm.
And one of the shareholders said it. Consistently, we have made sure that shareholders get return on their investment, no matter how small it might be.
The shareholders display strong sense of understanding and look forward to a better future.
They have done very well. They have competitors. Most brewery industry today, how many are in Nigeria, cannot even pay dividend. That's the truth.
Nigerian breweries' net revenue grew by 4.3% in 2020 to 337 billion naira from 323 billion in 2019.
Well, the future of work is not just about employee experience. The workplace is equally important. It's the need to keep on top of the ever-changing trends in how and where people work and even live that makes facility management an essential aspect of organizational success, which is why new international guidelines were published in 2018. As part of Nigeria's drive to optimize the benefits from international standards development on facility management, the Standards Organization of Nigeria in August last year inaugurated a committee to mirror the activities of the ISO Technical Committee for Eventual Domestication in Nigeria through adoption. The chairman of that committee, Mr. Collins Osayeme, joins us next to discuss this.
And Mr. Collins Osayeme, Chairman, National Mirror Committee, joins us now. Thank you for joining us, sir.
Thank you very much.
Good morning. Well, thank you. Well, tell us about this new ISO standard on facility management and why it's important for the Nigerian industry at this time.
Well, once again, thank you for having me in the studio this morning. I believe that some of us will be hearing the word facility management for the first time because it is not relatively known in the country. However, we are privileged to be supported by the International Standards Organization. That is the body that creates or publishes standards around the world. Now, facility management like I said earlier, is a profession that have existed in Nigeria over the years, even though not recognized for its strategic contribution to the development of the economy. In the wisdom of the thought leaders in the facility management profession worldwide, we came together at some point to develop standards for this profession, because one of the biggest challenges is not having standards. And even though it existed in Nigeria, there were different ways people were practicing facility management in an ad hoc manner and not properly giving a central role within the business setting. So, like I said, we came together, the thought leaders came together, and that far back in 2012, and ISO created an opportunity for us to develop standards for the profession, and work continued until 2017 when the first standard was published, which is definition of terms, because at some point we began to realize that every country had just to agree on the name of facility management. Some organizations call it facilities management, or some countries call it facility management, some calls it facilities management. There were a lot of discrepancies and issues around the profession. And we're not going to go anywhere without a proper structure and standard. So at 2017, the standards for definition of terms were created. However, in 2018, the management system standards for facility management was created, and that is called ISO 41001. And it became important for us to truly publicize these standards, because it's going to create, it's a game changer for the facility management profession, in my opinion, because I believe that people need to know what it means to provide quality service. Because someone has said before that Nigerians, we can identify fake products, but when services are offered, we are unable to truly identify fake products, fake services.
So what's the plan? How is it going to be implemented?
To create efficiency in the profession and help us to deliver quality service. Now, backing off a little bit, just to give us a brief highlight of what facility management is about. Facility management is an organizational function that integrates people, place, process within the built environment, that is within the workplace, to improve the quality of life of the people that uses the facility, and of course to enhance the core business within that organization.
All right,
you
Mr.
can agree with me
Sayanwe.
that
Mr.
the facility
Sayanwe,
management.
if you can hear me, sir, if you can hear me, what is the plan to roll out and implement it? How is it? I mean, you are in Abuja, but I'm sure you're talking about implementation in the whole country. What's the plan, the rollout plan?
Yeah, thank you very much. First of all, this is part of the plans that we have put in place to begin to roll out the implementation of these standards. The first thing that we need to be aware of is if people do not understand the value of the plan or that the standards exist, there's no way we can start talking about implementation. These standards has to be implemented within the facility management organizations, whether it is in-house or within a service provision company. So we expect that, first of all, demand organizations need to recognize that these standards exist, and they need to also begin to demand that the facility management organizations that provide services to them are able to comply or conform with the standards as specified by the ISO 41001. The first plan we have is to publicize the domestication of these national standards, because it's become a national standard. It used to be international, but good enough. The Standards Organization of Nigeria has adopted and domesticated these standards in Nigeria. So it has become a national standard that every practicing facility management organization should begin to implement these standards or get their processes to be in line with the standards as prescribed by the published standards.
All right.
And we expect
All
that
right,
by
Mr.
the time
Osanwe.
people get used
Can you hear
to
me, sir?
Yeah, thank you.
Sorry
Yeah,
to cut you short there, but skill gap is
Yes.
one major issue. And what are the players in this industry doing to improve and develop the skills in this industry?
Yeah, thank you very much. I believe that because the profession was like an afterthought, there has not been any person you will see in the street or in the industry that has gone to school from first degree to study facility management like every other profession, like the engineering profession, the medical profession. You have a start point from the first degree. However, we have associations that have recognized this skill gap in terms of education, and like the International Facility Management Association, the Institute of Workplace Management Professionals in the UK, the International Facility Management Association is based in the US but has 2 chapters in Nigeria, and they are very, very helpful in providing education and training to interested practitioners that want to develop skills in providing quality service to the organizations that they support. So we rely heavily on that, and we have begun to create local content in terms of provision of education to members of the public or professionals that are in our association, and train them with the necessary skills. And some universities have also started training people in the field of facility management, like the University of Lagos and the Ahmadu Bello University. They all have departments of facility management. And one of the reasons why we are very happy about these standards is because before now, we have only understood facility management at the operational level, but we are beginning to see facility management play at the strategic level. And you need a lot of education to understanding of how facility management work within a built environment or within a business to be able to operate at that level. So we are beginning to see people take facility management courses at master degree levels. And like I said, we have certification courses as well from the International Facility Management Association. People are encouraged to take the essentials of facility management, which is like the foundation. I encourage everybody that is interested in facility management to reach out to the International Facility Management Association to see how they can get involved with that. And also, we have the facility management professional course and, of course, the certified facility management course. All of these are geared towards improving the knowledge gap or improving the knowledge concept in the field of facility management. And we have other plans to begin to create local content because we now have a national association of facility management practitioners in Nigeria. And one of the cardinal objective is to bring facility management education to the doorstep to everyone who is interested in pursuing a career in the field of facility management.
Right, Mr. Sion, we have to thank you so much for joining us this morning. And we're looking forward to those local content concepts you talked about, and of course, to feel the impact of this new certification in the facilities management sector of the country. Thank you so much, Mr. Collins Osayome. He's the chairman of the National Mirror Committee created by the Standards Organization of Nigeria. But we'll take a short break now. When we come back, we'll continue with the program. Stay with us.
You're still watching Business Morning. The Nigeria capital market community have been busy. The equities market has remained in the green zone all through the week. Hopefully, today's session will not deviate from that. On Wednesday, there was a DMO bond auction. And to talk about the outcome of that auction and other issues in the capital market, Omotola Abimbola, investment analyst with Chapel Hill Denham, joins us now. Thank you for joining us. Good morning.
My pleasure. Good morning.
Yeah. So the equities market has been mostly bullish this week. What would you say is responsible for this?
For the equity markets, I would say that the bullish performance is most likely being driven by simply bargain hunting. Because at the moment there are really no key fundamental drivers of the market. The surge we have seen in interest rate movements in the beginning of the year has mostly doused appetite for equities. Compared to the extreme rally that we saw in 2020, and for now, over the near term, what would most likely be the key driver of sentiments would be the earnings reports for Q1 2021. We've already seen Q4 2020, reports by a number of corporates, and they are mostly mixed. And now they're seeing the Q1 earnings trickle in, particularly for the key tier 1 banks.
All right, so interest in the federal government bond auction was higher than expected on Wednesday as there was improved demand at the belly until ends of the bond. What drove this?
Well, for the bond market, like you mentioned initially, we saw an auction on Wednesday, and the outcome of the auction was mostly mixed. On one hand, we could say that the outcome was bearish because we saw a sizable uptick in the marginal rate at the auction by about 181 basis points compared to the auction results for March 2021. But it appeared as if the market had already preempted that movement in primary market rates because secondary market yields rather were already very close to where the auction yields cleared at the auction that took place on Wednesday. And the GM also tried as much as possible to actually ensure that they do not move the market significantly. So they actually allotted for investors at rates that were very close to secondary market rates. And that's why yesterday the reaction to the auction results, where we saw rates increased by 181 basis points, it was actually partly mild. We saw yields tick off across the benchmark bond yield curve by about 9 basis points to a new high of 12.44%. But to a very large extent, we could say that the reaction was mostly mild, and that's partly because the market had really preempted that move and already priced it into secondary market yield. But going forward, I think next week we have a lot of bond compliments coming in, so that should probably support the market in terms of yield direction.
Well, Omotola, inflation still remains a major challenge at over 18%. What alternatives do investors have at this point?
Inflation rate, like you mentioned, has been on the uptick over the past couple of months. The March 2021 inflation prints actually surprising negatively compared to what the market was expecting. It's in a high of 18.17%, the highest in more than 4 years. So for many investors, they've been finding solace. In 2020, investors found solace in the equity market, partly due to the fact that we had this extraordinary dovish monetary policy by the Central Bank of Nigeria in order to help both businesses, households, and also the government to cope with the COVID-19 pandemic that had the major impact on the Nigerian economy. So last year we saw an aggressive rally in the equity market. The all-share index went up by more than 50%. Which is the most impressive performance that we have had in years. Also in the debt market, we saw a rally, in fixed income deals. But at the tail end of the curve, the money market rates, we saw interest rates actually come down aggressively due to the CBN's dovish monetary policy, and we saw a number of investors actually, exit money market securities last year because of the extraordinary low interest rate environment. But coming into 2021, we have seen the CBN actually, try to change their monetary policy bias from an accommodative stance to a much more tighter stance. And that's why we have seen that interest rates, particularly in the money market, they have gone up significantly since the beginning of the year. I mean, if we just cast our mind back to the NTB auction, that we had in November 2020, we saw the 1-year auction stop rate, clear at 0.15%, which is a record low. But this time around, at the last NTB auction, that we had by the federal government, the 1-year cleared at 9%. So we have seen over 8 percentage points movement, in the 1-year auction rate. So to a very large extent, interest rates are now correcting and now going up. So investors are now more or less finding solace now in the fixed income market, because the real return initially, on investing in government securities was very poor from money market perspective. But now we have seen interest rates rise. So to an extent, people are finding solace in the fixed income market, but are also finding solace in real assets as well, such as infrastructure fund, such as real estate, ECC, where where they could get, sometimes, a much more better performance.
All right, so we've seen the first quarter earnings for UBA and GT Bank. How would you score those results, and what are you expecting from other lenders?
So we've seen two results from the tier one names. Like you mentioned, we saw from UBA and we also saw from GT Bank, and they were actually both mixed. If you look at GT Bank's performance, we saw PAT, profit after tax, actually decline by 9% year on year, in Q1 2021, which is a very poor performance. And to an extent, that performance, was dragged by disappointing, net interest income performance. But on the other hand, we saw non-interest income, actually improve due to some FX related gains, and also e-banking income. So that more or less, try to offset the significant decline that we saw in net interest income. So at the end of the day, performance was very poor on the part of GT Bank. But on the other hand, for UBA, it was the opposite. We saw a very strong performance from UBA on a year-on-year basis. Now going forward, I think banks should actually have a decent performance in 2021. On one hand, if you look at their top line, with the improvements we have seen in interest rates environment over the past couple of months, that should actually bode well for their interest income. So many banks now will be looking to actually reprice the interest rates on their loans, higher going forward. While interest rate on government securities itself, has also gone up. So interest income should come in very healthy due to the improvements we have seen in the interest rate environment, and non-interest income as well for the banks that have a long FX exposure. That is, they have more foreign currency assets than liabilities, which are monetary based. I think they should actually report very fantastic numbers on the non-interest income side. So we should actually expect a very decent performance from the top line. And then for the bottom, and then for the cost elements, of their P&L as well, you should probably see an improvement, in their cost of risk. Last year, because of the risk environments related to the challenges that we saw in the oil and gas sector, and as we all know, Nigerian banks have their biggest exposure to the oil and gas sector. So many of them, had to increase their provisioning in terms of loan loss provision in payment charges. But this time around. In 2021, I think the environment is a lot more conducive. Last year we had a recession. This time we're on a growth path as an economy. The oil and gas sector that was also challenged last year due to low oil prices and the weaker production volume also seems to be on the path of recovery. We have seen oil prices, particularly the Brent grade, stabilize above $60 per barrel. All production volumes are also going up in Nigeria due to OPEC's, easing of the production cuts agreement. So to a very large extent, in terms of asset quality, we should see an improvement, for Nigerian banks as well. So I think we should probably, see a very resilient performance for the banking sector in terms of earnings in 2021.
All right, Omotala, but with the admission of the securities of the Nigerian exchange group on the NASDAQ platform, how much of a game changer would this be on NASDAQ?
It should be an interesting development. I mean, just to give you a background of the question you just asked, we saw the NGX, being listed, on the NASDAQ, which is the alternative securities market and over the counter market, compared to the standardized exchange that we have in the NGX for trading equities. Now the Nigerian Stock Exchange, has been demutualized, by a process that has now made the company tradable on the NGX. So in terms of transaction volume on the NGX, you see an improvement in terms of that. And perhaps one day the market should be looking forward to actually having the NGX listed on the NGX itself, that is being listed on the secondary public exchange, perhaps going forward. But in the near term, this looks like a very positive development for the NASD Securities Exchange.
We have to thank you so much, Omotola Abimbola, investment analyst with Chapel Hill Denham, for joining us this morning. Enjoy your weekend.
My pleasure.
Thank you.
So we have more on capital market with Edidiong Iwang. Edidiong, it's been a great week so far. I hope today will not dent that record.
Well, hopefully, unless we see huge losses today, I think the market is still going to end on a positive note, because we've seen gains right from the beginning of the week. So we've had 4 positive trading sessions, although yesterday's gains were marginal. But then unless something major happens today, I think we're still going to end the week smiling.
I hope, I pray.
But then yesterday, we saw the market up by about 0.01%. Now, it was a tussle between the bull and the bear, because at intraday, we saw the market in the negative territory, but then at the close of at the sound of the closing gong, the market was up 0.01% at 39,131.80 points, while the market cap was at 20.479 trillion naira. Now, the month-to-date returns currently stands at plus 0.2%, while the year-to-date returns has moderated to minus 2%. Activity level was mostly negative yesterday. Volume was down by about 4% at 228.11 million units, worth 2.63 billion naira. And all of that was traded in 3,656 deals. Now, GT Bank was the most traded stock in terms of volume and value. GT Bank contributed over 1 billion naira to the total value of trades yesterday. For the sectoral performance, the banking sector was down 0.04%. And we're interested you to know that we would have seen huge losses from the banking sector yesterday because Zenith Bank was down by about 1.4%. But the gains from GT Bank, from FBN Holdings and Access Bank were able to kind of water down on the losses from the banking sector. But to talk more about the market is Adedoyin Allen, the Deputy MD at AfriInvest Securities. Hello, Adedoyin. Thank you for joining us on the program.
Good morning, Edith Young. Thanks for having me.
Good morning. So we've seen 4 sessions of gains. Unless something major happens today, we're likely to end in the positive territory. But what should we be expecting from the market next week?
Okay, thank you. I actually share your sentiment. We are hopeful that this week would close in the green. This week, the NSE All Share Index has advanced 0.83%. with banking sector taking the lead, up 4.29% week to date. We expect profits taking next week, especially on the banking sector. However, we still anticipate release of more first quarter earnings, which might also affect the sentiment in the market. Yesterday, after the close of market, we saw GTB release its Q1 2021 earnings, and it shows a decline in their earnings year on year, and the earning per share also dropped to 1.1 naira 60 kobo per share from 1 naira 77 kobo in Q1 2020. So with these results, we might see some sell-off in GT, which might affect the banking sector. We still expect that the trading this week might close on a positive note on the back of corporate actions expectations. However, we still maintain our bearish sentiment in the equities market as yields in the fixed income space continue to rise, which might reduce investors' participation in the stock market.
So what are the opening calls in the market today? Is the market still positive?
Yeah, as we speak, it's still kind of flat, but we're seeing more positive sentiment.
Okay, so just more about sectors now. You've spoken about the banking sector, but what about the insurance sector? We've seen declines in that counter for a while now. So should we be expecting some bargain hunting or some positive sentiment next week?
It depends on the earnings release. There's nothing driving the sector as we speak. And, insurance stocks are basically penny stocks, and that's where we see most traders in the market trying to take opportunities. So if there's no catalyst to drive that space, we'd still see the bearish sentiment, except we see positive results in that sector.
All right, Adedoyin, thank you for your input on the program. Have a lovely weekend ahead.
Thank you, Adidioung. You too. Bye.
Adedoyin Allen is the Deputy Managing Director at AfriInvest Securities. Now back to the market now. Consumer goods was down 0.01%. Industrial goods was unchanged, while insurance also declined. That counter has been declining on a steady this week, and oil and gas was up 0.21%. At the unlisted securities market now, since the admission of shares of NGX on this platform, we've seen huge volume and we've seen huge activity in that market. Although the market was down yesterday by 0.71% at 763.14 points, while the market cap was at 542.44 billion naira. We saw about 8.91 million units worth 164.08 million naira, all traded in 43 deals. Now, the bond market continued its bearish run yesterday as we saw yields expand in that space. However, yields at the short end of the curve were flat, but then we saw yields expand at the mid and the long end of the curve. There was huge demand for the March 2049 bond and also for the July 2045 bonds, which, represent the long end of the curve. There were 63 deals in that market worth 40.21 billion naira. But to talk more about trading yesterday in the bond market is Dumebi Udegbunam, a fixed income trader at UBA. Good morning, Dumebi. Thank you for joining us on the program. I guess we've lost Dumebi there while we try to get him back. The Nigerian Treasury bills market was quiet yesterday. We saw just 2 deals in that segment of the market, and that was on the March 2022 Treasury bills. The CBN special bills market, there was no activity in that space, and also in the OMO market, there was no activity in that space. However, there was an OMO auction yesterday So I'm sure investors were just paying attention to that to see how that would play out. Hopefully, if we get maybe back, he'll talk more about how that played out. Yesterday as well was the first trading day after the bond auction. So we saw investors, take position and take advantage of those higher yields. Now we've seen yields in the bond market, particularly on the rise. The treasury bills market is also doing better because we're seeing yields at about 5% now. We would recall that in the not so far past, we saw yields in that space at about 1%. So yields in the fixed income space have actually been on the rise lately, and that's also affecting what we're seeing in the equities market. And unless there's some positive catalyst from the macro economy as it stands, we're still likely to see yields rise in this space, while the equities market will suffer. With the earnings season in full focus now, we're still expecting more earnings from companies, I'm sure by the time we see the earnings from the likes of the Dangote Cement or the Bar Cement, hopefully they're impressive. That would also bring some positive sentiment back into the equities market. But for now, investors are just going to be on the sidelines, and it's going to be a case of like Chimezie would say, the ding-dong movements, where one day we see gains, the next day we see losses, because right now investors don't want to keep their money just sitting down in banks, and so they put it in instruments, and as soon as they see any form of profit or yield, they sell off and they cash out, and then or like Glady would say, buying the dip. So when the market is down, you see investors rushing to take advantage of those lower prices. And while the prices go up, we see some sell-off. So hopefully we'll keep our fingers crossed and hope for some positive catalyst from the macro economy, to boost investor sentiment in the market.
Well, we hope the weekend will bring a change. All right, Eddie, thank you so much. We'll take a break now. When we come back, we'll head to London. Welcome back. You're still watching Business Morning. We now head to London, where Juliana is waiting to give us updates from the UK. Hello, Juliana. Good morning. Thank God it's Friday.
Yeah, thank God it's Friday, Annie.
Yeah, and we hear shopping has returned in high volumes in the UK to levels higher than before the COVID-19 pandemic. Meanwhile, budget deficit is lower than forecast during the pandemic. Fill us in on all this.
Yeah, besides the public sector borrowing, which we'll get to later, some positive data coming from the Office for National Statistics about retail sales. They grew 5.4% in the month of March. This follows a 2.2% rise in the month of February. And if you think about it, in March, non-essential stores were still closed. So this is absolutely incredible data for Chancellor Rishi Sunak. Just goes to show that all the pent-up demand that the Bank of England have been talking about is finally starting to be used. The British public are starting to spend their pounds that they've been saving over the past few months. Now, this amount isn't as high as the peak we saw in the summer when the lockdown restrictions were fully lifted, but it is still more than the pre-pandemic data that we received in January last year. So this is a good thing. And I can tell you myself from seeing the queues, still there are queues outside a lot of the sportswear companies, a lot of young people still trying to get their hands on a pair of trainers. The retail sales in April expected to be way above the level we witnessed in March.
I hope you can manage to get one too, Juliana. Well, the public sector borrowing, as you said, hit the highest since the end of World War II. Well, that sounds scary. What's the Debt Management Office doing about this?
But it's going to be difficult. I think all of, the foreign financial observers have told world governments to hold tight. And we've seen them doing that, haven't we, in America, across Europe, and also here in the UK. Last year, we borrowed over £300 billion, still short by £25 billion from what the Office for Budget Responsibility had expected. But if you compare it to how much we borrowed in the financial year, it's £254 billion more than that. So it is a cause for concern. But like I said, the OECD, the IMF, they've all encouraged, large economies not to pull up taxes yet, to keep pumping fiscal policy into the economies to make sure people have enough money to eat and spend a little, which is exactly what's happening. We are going to start seeing a wounding down of some of these public spending measures, including the much welcomed furlough scheme, which will end at the end of September. And of course, in last month's budget, the income tax threshold wasn't raised. So over the next couple of years, we will see taxes rise here in the UK.
And some 400,000 green jobs are in the offing if Labour leaders' $30 billion plan goes through. What's the update on that plan?
Interesting story. It's an old one, been doing the rounds for some time, but it's come back into the public domain now because Sir Keir Starmer, the opposition Labour Party leader, is in trouble. He's falling in the polls. Some critics describe him as being a bit wet, a bit damp when it comes to the kind of ferocious personality of Boris Johnson. If you see the two of them in the House of Commons, you know, it has been a bit of a struggle. And even though there have been some pretty massive government mistakes during this entire COVID crisis, Keir Starmer just hasn't been able to get the grip and turn the public tide in favour of Labour. We know they pretty dramatically lost that red wall, which is a seat of constituencies in the north of England that were historically Labour. The safest seats in the country were lost to Boris Johnson. Next month, we have a by-election in Hartlepool. It is one of the last red wall seats, and Sir Keir Starmer is desperate to keep a hold of that, which is why he's re-announced this scheme to pump more jobs into the manufacturing economy, which does employ a lot of people in the north of England. And he has made these suggestions. Whether or not the public are going to go for it, you know, only time will tell. But he definitely can't get it into legislation because he's in the opposition.
All right, Juliana, thank you so much for those updates. And, well, you're still up in the afternoon. So now we go over to the crypto market where Ladi will tell us, is it red, is it green, is it in between?
It's red. Red. No long story, it's red. Look at Coin 360. It's all red there. Bitcoin at 49,326 this morning. Ethereum 2,205, down by 11%. Well, we have only the stable coins here in the green. So when you see the stable coins in the green, you know it's very bearish at the moment. Market cap $1.80 trillion, down about 1.27%. 24-hour volume 268.96 billion, up about 40%. Bitcoin dominance seems to be climbing up a bit, up about 51.45%. Let's talk to Wilfred Michael now, digital market analyst. Hello, Wilfred.
Hello, Ladi. It's a pleasure to be on with you.
Thank you. Good morning. It's red again. What is going on this time?
The market sell-off that we are seeing is mainly a result of the U.S. announcing plans to raise capital gains tax for the wealthy to as much as 39%. So the market is panicking because of the news, and many people are trying to take off their profit before any such regulation comes into place.
So how low do you think it's going to go this time, Bitcoin?
Well, this is the second 20% plus correction we are seeing in this market. Sorry, the third one. So if market conditions, the beauty of a bull market is the amount of capital that is lying in wait and just waiting for the market to tell us where it's going. So once the market makes a decision, we are likely to see a lot of money coming into the market. The angle to watch is the level at 47K. If Bitcoin drops below 47,000, we are likely to see even more serious correction.
Okay. All right, Wilfred, thank you so much. Thank God it's Friday, but it's red. Enjoy your weekend.
You too, Laddie.
Thank you. Yeah, so price of Bitcoin about 48,000, down about 9.63%. 24-hour volume, 85.126 billion traded. The price of Ethereum, 2,205, down about 9%. 24-hour volume, $57.688 billion. Top alt by market cap, BNB. BNB has done well, but now the bears have their claws in BNB right now, down about 12% this morning. Cardano, down about 13%. Polkadot, $29, down 12%. And XRP is the biggest downer here, down about 20% at $1. But it's had a good run. Hopefully, we'll see what the SEC has to say about XRP being a security. Bitcoin Gold, one of the forks there, up about 36%. So who knows? You should be looking at the other Bitcoin forks at this time. Since Bitcoin Gold is doing well this morning, we have Bitcoin Diamond, you have the other ones. Then when you see stable coins in the top gainers, you know it's real. PAX up by 0.03%, HUSD up 0.02%, and Binance USD up by 0.01%. So traders are running into the stable coins at this point. Top 5 losers, IOST down about 33%. HOT hasn't had an incredible run, down about 32%. DigiBytes down 32%. So it's not a good day for traders, I must say, Ini.
Wow, losing 33%. That's
in 24
huge.
hours. Massive.
That's really massive.
That's the swings we talk about in this market.
Yes. Yeah. And I mean, like Michael said, going down, looking at Bitcoin going down to about 47. I mean,
that's a key area to watch. At this
like
point.
you always say, we should buy the dip. Maybe this is the time to.
Well, you don't want to catch a falling knife.
All right. Well, this is not a financial advice in any way. We're just reporting the market to you. And that's where we draw the curtain for this week on Business Morning. It's been a pleasure having you. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching. Enjoy the weekend.